Global M&A has been spooked by fears of a Eurozone breakup due to the Greek bailout last year. Eurozone deals accounted for 13.6% of global M&A. That's down from 16% in 2011. On the line to discuss global trends in M&A activity is Nuala Gallagher, mining correspondent at Merger Market. Nuala, thanks so much for joining us this afternoon. Before we throw forward in terms of what's being expected moving into 2013, let's take a look back at the year that was for M&A activity. What kind of activity did we see over the period globally?
Oh, hi, Alicia. Thanks for having me. Well, I think, looking at the 2012 calendar year, obviously we saw global M&A down 2.7% year on year to 2011. But quite interestingly, if you juxtapose that against the fact that M&A activity in Africa and the Middle East was for 2012 up 15.5% ideal value on 2011, it's clear that there are also a lot of different bits and pieces taking place in Africa, predominantly led with utilities, mining and the energy sectors.
We looked at the lowest for deal values since 2010. Having said that, though, there was quite a turnaround if you look at the two halves. I mean, the second half activity seeing a pickup in the first half activity, rather, seeing a pickup in the second half. We had activity up in the second half, 13.3%. Is that a sign of a turnaround? To what extent can we assume that?
Well, it's a very, very good point to make, and certainly if you look at the fourth quarter of 2012, we saw in the region of $18.9 billion worth of deals for Africa and the Middle East, which was the highest quarterly deal value since the first quarter of 2011. It might be slightly optimistic to suggest that that would be a sign of a grand turnaround, but it's certainly not something to be sniffed at.
How telling is that of the opportunity and, that's out there, and what companies are willing to do with their cash right now, Nuala, on the one hand, but on the other hand, the state of the global economy and the companies that operate within it?
Well, I think if we look specifically at the mining, metals and wider energy sector, which I tend to focus on, it's probably a good base case for that. Obviously, pan-continental African development is synonymous with the mining sector. It's an extremely important sector within the country. We've seen plenty of headlines on it today. But if you look, as you say, at the cash that's available and who is and isn't buying in and out, with respect to that, if you look at $16.6 billion worth of deals for energy, mining and utilities as the most active sector in Africa and the Middle East in 2012, that's 32.3% of all M&A value in the region.
Taking a look at who's buying where, Nuala, I mean, if we're looking at things on a global scale right now, where are those opportunities becoming most evident, and where are companies steering clear from?
Well, I think obviously we can't ignore the Eurozone situation if we're going to look at it in a global context. But that said, if we're looking at who's really being bullish about buying in 2013, it's a bit obvious that we would expect more Chinese outbound M&A, and that would account for activity in Africa, Europe and the Americas.
Let's take a look at some of the themes you anticipate to dominate this scene as we move into 2013.
Okay. Well, I think, for example, if we look again at Africa and Middle East, I mean, as an M&A market, it may be comparatively small scale in a global context, but if we look at the growth we've seen there in deal value on top of 2011 against the downturn that we've seen globally, again, we are seeing, figures that we can be optimistic about. That agglomerated 15.5% rise is obviously something that we need to take on board. And not only in mining or utilities or energy or anything like that. I know that a lot of our journalists have been paying a lot of attention to various themes in telecommunications, for example, such as social media uses, broadband and fiber optics development.
Nuala, let's, if we're looking at the kind of activity we're seeing right now, I mean, you put a lot of emphasis on Africa and the Middle East within this global context. What role do you see emerging markets playing, within this arena as we move forward?
Well, again, I think, the real sort of the clinch we have here with Africa is that with respect to industries like energy and mining, these are not movable industries. There are very few other industries that have been around in one particular site for hundreds of years. It's not possible to move a mine. And, within that context, you actually get a lot of opportunity. You don't get, companies re-domiciling and moving around, you have a long-term, sustainable business model if you're prepared to cultivate it. I think that can certainly be said for some of the other emerging markets too. I know with respect to India, for example, providing licensing agreements on capex for major industrial developments as move forward, then we may again see an opportunity for a different sort of growth where, quite frankly, it's not possible to generate the same sorts of returns in the same industry anywhere else in the world.